morning and welcome to this webinar. Thank you for attending. Thank you to Index North Central for inviting me to talk to you. As we all know, the pressures on conveyancers are now increasing with every piece of legislation, every case that comes through, every new bit of clever ideas from the industry generally place more pressure on you as conveyancers and more hoops you have to jump through. Working closely with people at Index obviously is a way to get the information to be able to then pass on to your clients. Stewart Title has worked with Index for a number of years now with the Index Insure product, and we're very proud of that relationship, very proud of helping lawyers like you give a better service to your clients. Before joining Stewart Title, I was a property lawyer for over 25 years, which meant I bought title insurance when I thought it was useful and didn't buy it when I didn't think it could solve the problem. Now that I know all of the products and services that are available from insurers, I realise that there were other products I could have bought that would have helped me and the client out of a situation. But equally, I realised that some of the products I bought weren't quite right for my client. And that is probably the main point behind today's presentation. You need to understand the policies, what they do, but just as equally, you need to understand what your client's needs are, what their requirements are, and whether title insurance is a remedy for them in those circumstances. It's that area of crossover that we'll be looking at a lot during this talk. One of the many pleasures of no longer practicing as a lawyer is it does mean that I have more time to read cases, and there are an enormous number of cases being determined by the Lands Tribunal and the courts, which have an effect on day-to-day operation of how your clients use their property. I can read about those. I can also read general articles about conveyancing. One of those I read last year highlighted some of the best replies to additional pre-contract inquiries found by lawyers. In one example, the buyer identified there was a lack of building regulations for some works done 10 years ago, asked the seller's lawyer to provide title insurance for that risk, and got the reply back that title insurance is like crack cocaine. If you use it once, you'll be buying it all the time. Obviously, I do speak as a former user turned dealer, so my view is possibly prejudiced, but I wouldn't agree with that. If you understand what a policy does, how it works, and equally what it doesn't do, it can help you provide another solution, another answer for your client, and allow them to proceed safely and smoothly to completion. Starting with the basics, when do you use title insurance? Obviously, when buying a property, and previously and still around, people will ask you to buy insurance when you're selling it. There are reasons which nowadays I think that should be avoided. We'll talk about those later. Where you're buying a property, you identify a problem, title insurance comes into play there. If you're looking at a development situation where a client has acquired some land, has proposals to vary it, whether that's a proper full commercial development or merely somebody wants to add a garage or a garden hut to their property, may need to look at title insurance there. And similarly, where you're refinancing a property, you may want to get title insurance there. On the refinancing part, when you're acting on a transaction and the lender wants cover and your client, be it a buyer or a borrower, doesn't want cover, you can get specific lender-only policies. The benefit for you is, or for your client, is that the rates of premiums are lower on these because obviously the risk is slightly different to a buyer policy as well. So those are available from Index Insure on all of the major risks. So we know when it's to be used, but why is it to be used? Simply, title insurance is a means to an end. Transactions have always been hit by delays. Sometimes these get worse, sometimes they get better, but title insurance grew up to provide a quick and safe solution to these problems. As a conveyancer, you're often at the mercy of third parties who have or appear to have no interest in dealing quickly with your request for information. Your job as a lawyer is to gather information, to explain it to the client, and then to deal with any queries they have. You need that information, whether it's from local authorities, managing agents, Where those people aren't willing to give the information or unable to give it quickly, this can cause a delay. You need to find a solution to it. Obviously, if you can get the information in good time, then that is your job as a conveyancer to get the information, explain it to the client. However, where that's not possible or not feasible in a timescale, then title insurance can give your client protection. Where you're investigating title and you identify a problem, title insurance can again be a solution for you. It's not taking away your job to read the title, to understand the replies to inquiries and explain them to your client. But where something arises, you can possibly use it then as part of the solution. Before title insurance became readily available and acceptable, you would often find yourself saying to a client, they'd have to take a view on a problem, take a view on the fact there wasn't planning permission for an extension. I think we're in more litigious times than we were then. And in any event, is it really fair to ask your client to take a view on a legal concept where they may not fully understand the full implications of it? Where you do look to find alternative solutions, they fundamentally fall into these three categories. Can you pay off the objector? We quite often find neighbours objecting to planning applications or then attempt to enforce covenants more out of a desire to get some money out of the situation than to actually protect a right. The courts have started to, if not clamp down, certainly look less fondly on people who are merely enforcing paper rights that don't preserve any real benefit for them. But sometimes paying off an objector may be the quickest and easiest way. Obviously, you can seek to negotiate a solution with a neighbour. That may well finish up with varying the plans your client has, or again, making a cash payment to them, to the neighbour to go away. Ultimately, of course, in many cases, litigation is a remedy. If you're dealing with somebody trying to enforce, or you're afraid of somebody trying to enforce restricted covenants, you can make application under Section 84 for these to be varied or renewed. Obviously, if you recommend any of these routes to your client, you need to make sure that they realise these routes are likely to delay a transaction and will also be costly. One of the benefits of getting title insurance is, of course, that if these objections are raised later, then the insurer will pay for these remedies. So if you're going to recommend title insurance to your client, you really need to understand what it does. At its simplest, an insurance policy is an agreement, like any other agreement in a transaction. It says that if you pay us a premium, we will do X in the future should a claim arise. It's not a magic wand. It's not a talisman to stop problems happening. It is merely protection for you should they arise. As we said earlier, it's not the only solution, but it is quite often the quickest and most cost-effective solution. Again, bear in mind, it is a contract. During the conveyancing process, you'll come across a number of contracts, and there are very few which you would, or should anyway, allow to go by on the nod. So read an insurance policy, understand what it says. If there are queries, ask, and if there are still problems, ask for it to be varied. The insurance policy is based on the proposal. That's information given by you on behalf of your client or by a broker on behalf of your client to the insured, to the insurer. This includes where you're ordering a policy through an online system like Index Insure, the assumptions that you tick on the screen to get your policy. If you're going through a bespoke process, it's the information which you give in replies to inquiries from the insurer or the broker. It's very easy as part of the conveyancing process to answer these queries because the emails come through. You're asked to say what the client intends to do with something, what the history of it is. If you answer these, you are given information that will form part of the proposal which the insurer will be basing its offer of insurance on. Always bear in mind, those are not your replies. It's not your information, it's your client's information. So always make sure that what you're saying tallies with what the client says. Bear in mind that in a bespoke situation, information given in emails, in telephone conversations can form part of the proposal. Knowing that the proposal is an important part of the insurance policy means that if, as is increasingly common now, you're being asked to take the benefit of an existing policy, the previous owner had got a policy to deal with lack of planning, or a developer had got a policy to deal with restrictive covenants on a development site. If you take that policy, then you really need to know what was contained in the proposal to fully understand the level of cover and protection being given. It certainly is best policy always to ask for this, and normally, even if the seller's lawyers can't provide it, you should be able to get it from the insurer. But without knowing this, you're not seeing the whole of the policy, and you can't really recommend it to your client. What does a policy do, and what doesn't it do? It's quite easy when you've bought a title insurance policy, and I know I was guilty of this as anyone else, of saying to the client, either face-to-face or in correspondence, we discovered a problem with building regulations, but we've solved it with title insurance. Title insurance doesn't solve the problem, it doesn't get rid of it. It merely gives you a weapon to fight it should that arise in the future. Only a negotiation or litigation will remove the risk entirely. So if the seller didn't get planning permission for an extension, that extension is potentially always at risk of somebody coming and objecting for breach of restricted covenants, possibly for planning. So your client needs to understand that the risk is still there going forward. Policy ultimately only gives financial comfort. It will cover those costs we looked at, cost of negotiation, settlement, litigation with a third party, with a local authority. Ultimately, if a solution can't be found with the objector, the policy will cover the loss of market value. That's the difference between the property with the benefit of the works or use which was being put to, and the value of the property when that right has been removed. Standard policies don't cover abortive costs. So in a development situation, your client could have incurred substantial costs before an objector comes out of the woodwork to complain. Those costs will not necessarily be covered by a policy. Even where they are, settlement is normally only made at the end of litigation or negotiation. That can be several years. We've had examples here, and other insurers have similar ones, where an objector has come out after works have started on the site, and 3, 4, sometimes 5 years later, the negotiations and litigation are still ongoing. In that time, the insured will have been carrying those abortive costs. Also, a standard policy will not deal with loss of profit. If your client had been intending to let out the premises, a shop unit, office unit, or HMO, and is unable to do so, the policy will not normally cover the loss of rent that would have been earned there. It will not, as a standard risk, cover the enhanced value of the site. If your client has bought it to turn a house with a large garden into development of 4 or 5 smaller houses and enhance the value dramatically, market value may not cover that. If you're looking for any of these covers, speak to the insurer, speak to your index insure representatives and explain what you want covered. Policies can be adapted to cover these risks at additional premium. Bear in mind that in all of these, we're talking about market value. There's a great difference between market value and emotional value, particularly in residential land. People buy a house normally for many reasons, most of which are personal or emotive rather than financial. They buy a house because it's in the catchment area for a good school. They buy it because it's close to grandparents for free childcare. It's a quick walk to the station in the morning. Those are emotive things that are not covered by the market value. Even in commercial situations, your client may well have bought a property on a certain parade of shops because it has the right footfall of customers for it. That may not be covered by the market value there. So bear in mind, explain to your client what the policy covers, what they will get and what they won't get. Understand their needs. Remember always that the insurer is looking to settle a problem. That means in many cases, they may agree a settlement with a neighbouring owner, or they may agree to vary a development and make a payment to you of loss of market value. That may not cover exactly what your client wanted, your client may actually wanted to fight to try and keep their development as it was. The insurer is going to be the final say-so in these negotiations. So if you're looking to get a policy, obviously online, as you'll know through Index Insure, there's over 150 different risks there, cover up to £20 million. Great thing about online systems is you get the same protection of insurance policy, but it's available so much quicker. All in all, you can get a draft policy and a quote in about 90 seconds from Index Insure. So it's very quick. Where there are complications in the risk, particularly where there may be an element of development in the situation, even if that's just your client wanting to alter their property slightly, or in a commercial property actually wanting to make a development, then that risk is likely to become a bespoke quote. You speak to Index Insure, that will be passed through to an underwriter to look at. And in those cases, you really just need to be ready to have the presentation as completed as you can in order to pass through to the insurer to avoid any unnecessary delays. Basic information we require, shown on the screen here, title information. We need to see the registered title for the property, or if applicable, we need to see the unregistered title. We need to understand what the actual problem is. Just saying we need cover against restricted covenants doesn't make it clear. What is your client's particular concern or worry about those restricted covenants? How much cover do you need? What's the level of cover you're looking for? Is it the value of the property? Is it the amount of loan? If both of those last 2 points sound ridiculously simple, you would be amazed by the number of requests we get in from lawyers every week asking for title insurance, which don't include basic things like the level of cover required. So always give more information, as much information as you have. If it's an existing problem, there's already been a breach, then the insurer would want to know how long this breach has been going on. Have there been any objections made by neighbours? What are the current uses of neighbouring properties? Do these show that similar breaches have been tolerated in the past? If it's a proposed development, is planning required? If so, has it been obtained? Were there any objections raised? Did any of those objections refer to title matters? And again, have there been any neighbouring properties varied or altered in a similar way? None of these are legally binding, as you'll know from cases, but they do help to give the insurer comfort to assess the amount of risk and the premium. In complex situations, we may well ask to see title information of neighbouring properties. Bear in mind, restricted covenants are only enforceable if they are protected and if the neighbour actually knows about them. So sometimes neighbouring title policies, title information can help you. In complicated cases, we may want to see an expert's report, surveyor's report on the likely effect of the breach. Before your client can really decide if a title policy is what they need to protect them, they really need to understand what they can and can't do when they have a policy. Title insurance protects your client, but it's very much like a medieval suit of armour. It gives you great protection, but it also restricts your movements in the future. Also bear in mind that the insurer has an interest in the property from the moment you take the title policy, and ultimately their decision will be final. Your client needs to understand that there shouldn't be any communication, written or verbal, discussing the risk or the policy. If there's been any communication before the request for the policies come out, then the insurer needs to know about this. So if you've already spoken to the local authority about the lack of plan permission, lack of building regs for some works, then that may well mean the policy would not be valid. So again, in many cases, the answer is to outline the options to your clients and then give them the chance to make the decision which route to go down. Going down either of the routes, applying to local authority, talking to a neighbour, can sometimes then prevent you proceeding with an insurance application. Also, once you have a policy in place, there are restrictions on what you can and can't do with regard to the defect. If you've got a possessory title policy, you can't make an application to the Land Registry to improve that title without the consent of the insurer. Case of a policy dealing with lack of planning or building regs, then even an application to the council for plan permission for totally different works may notify them of the breach and bring a claim about. So once the policy is in place, you need to check with the insurer before you do any action with third parties or with statutory authorities. All policies carry restrictions on disclosure to your client. It prevents what they can do and say to their neighbours, to other authorities. Disclaimer will not allow the insured to disclose a policy to any third party that reasonably might be believed to be able to make a claim. This covers not just the insured, but also parties acting on the insured's behalf. So in a commercial situation, it's the staff of the insured. It's the people in the shop or the office. If they talk, they could make a disclosure to a third party. It means surveyors acting on your behalf. It means estate agents. It means that where you are selling a property, you can't disclose the existence of the policy without the consent of the insured before you have a bona fide prospective purchaser. This means in situations such as an auction situation where you provide an auction pack as part of the pre-auction information, you cannot refer to the title policy in there without the consent of the insured, or the consent of the insurer. Bear in mind also, as we look now at proposals for upfront information, this is an area which will need to be addressed again, because by putting the information into the upfront pack, it will be disclosed to people. Generally, the concern of insurers is always that your neighbour might see that a property is up for sale, get the title information, and then make a claim under the policy. You are allowed to disclose to bona fide prospective purchasers. That is generally taken to mean somebody who's made an offer for the property and the property has been taken off the market. So, quick look at what types of policies are available. As I said, there's over 150 risks, a combination of risks available through Index Insure for residential and commercial properties. But they basically fall within about 6 main categories. Obviously, there are those which are transactional, helping you deal with delays or problems in providing information. Local authority searches are often a delaying factor in transactions. The information you need is essential for your client to make an informed decision on whether they want to purchase the property. And whilst the government target is 10 working days for supply of this information, this is not being met by a number of authorities. Just looking today, Cambridge City Council is 25 working days, that's 5 weeks. Central Bedfordshire is 35 working days, so 7 weeks. Put simply, that means if you started today, you wouldn't be in a position to report to your client and proceed to exchange until the 2nd of April. A no search policy can be used instead of a search, so you have the benefit of that policy. The effect of the policy is to cover you against anything which would have been disclosed by a search carried out on the day of the policy. In addition, you can get a search delay policy. This is where you've submitted a normal search, be it a regulated search or a search direct to the local authority, and the replies are not back when you need to exchange. If you get a search delay policy, it does protect your client, but you still have a duty under SRA rules and CLC rules to report to your client on the search when it's received, even if this is after completion. In some cases, you may be asked to accept an old search where there's been a previous abortive sale or where there's a development situation and a developer has a sales pack which includes an old search. In those cases, you can get a search validation policy. This has the effect of reviving a search which is less than 2 years old, so it is good and valid for the date of the policy. Drainage and water inquiries, obviously, again, very important. And again, you can get policies there to cover the lack of information being supplied there in the same circumstances. Chancellor repair liability remains an issue, as much as we hope it won't do. The change of rules in 2013 mean that gradually this will die away, but on the current level of transactions per year, it's still going to be another 10 years before Chancellor repair liability is gone entirely. Again, here you can do a search and you can get that via index, or you can get a no search policy, again via index insure, which would provide you cover against any things that might be revealed by the search. If you have done a search and there's a potential liability revealed, then you can get a policy to cover that. And even where there is a known liability or a registered liability on the title, you can obtain title insurance against that as well. Obviously, access is a major issue. People buying properties. Can you access the property directly from the adopted highway? Sometimes there may be genuine reasons why not. There may have been a ransom strip held by a developer, or it may even be by error. Sometimes local authority plans are not particularly clear, and a phantom ransom strip can be shown. But bear in mind always, does your client only need access to the front of the property? If it's commercial properties, it's serviced from the rear of the property. Are there deliveries there? Are there passageways they have to pass over? Are there shared driveways? In many cases, shared driveways actually require you to be driving over a neighbour's land in order to access your part of the driveway. If those rights are not clear in the title, you need a policy there to protect your client on there. Restrictive covenants are becoming increasingly popular as a case for the courts to decide. There have been numerous cases in the last couple of years about restrictive covenants. Part of this is really as a result of relaxation in planning law, which we've seen over the last few years. You're able to extend your property, you're able to add new buildings to the garden, and we see now government proposals this week to make that even easier. So where those planning rights go, homeowners are increasingly looking to restrictive covenants to protect their rights and to prevent a neighbour from doing a development which they don't like. So things like extensions, things like changing the use of the property, a degree of home working into it, or converting part of the property into business premises can cause problems. And neighbours may well seek to enforce covenants. There are obviously a lot of properties with restricted covenants dealing with extensions, with alterations to the front of the property, and these covenants can be enforced. The courts are looking increasingly to allow development to take place where possible, but that may be still a need to make a payment to a neighbouring owner. Very similar is really changes in use of a property. Just because your client is buying a residential property, do you know that they don't intend to carry out some form of home working or commercial use of the property? We've seen cases in the past year of changes to residential property, someone using a garage as a personal training area, people using new buildings at the rear of the property, summer houses, garden houses to be used for therapy sessions and so on. These are all changes. We've even had cases where you can see that local authorities are using properties for sheltered housing for children in care, and neighbours have sought to prevent that by enforcing restrictive covenants and by alleging a lack of plan permission for change of use. All of these things need to be borne in mind when your client says they want to carry out any business use. Obviously, a sort of standard home office use is unlikely to breach use covenants, but you do need to think about where it's extended. Are members of the public going to be invited to the property? Is there going to be a degree of disruption to neighbours? Possession can often be an issue. Quite often, registered titles don't cover the whole of the land. Bear in mind always that land registry plans are advisory only. They're not legally definitive. So there may well be strips of land, areas added to the end of a garden, which are not within the registered title. How do you protect those? Is it essential to your client? Bear in mind matters like parking. It's very often the case that parking can be protected in a number of ways. A demised space, a specific right to park in communal parking, or a general right to park in residence parking. Your client needs to understand the effect of all of those, the differences between them, and then to understand that these rights could be restricted or prevented. Also bear in mind your client's particular needs for parking. We have had a claim where an insured was purchasing a property. The lawyer looked at the title, realised that the parking space immediately outside the front door, which had always been used by that property, wasn't the demised space. Demised space was somewhere down the road, a couple hundred yards down the road, and the space outside the property, in fact, belonged to a neighbouring owner. The lawyer identified the issue, purchased a policy, and the client thought that was the end of it. Change of ownership in the neighbouring property meant that the new owner objected to the use of the parking space and prevented them from doing it. The insured made a claim, which we accepted and were paying out on. The insured then explained that the diminution in market value, which was being talked about, which had been protected by the policy, would give them a couple of £1,000, probably sort of 5–10% of the purchase price of the market value of the property. But in this case, the insured's partner had severe mobility issues and said that, in fact, inability to use that parking space outside the unit, outside the property, would make the property effectively useless for them. So that's another example of what we talked about at the start. Understand what the policy does, what protection it gives to you, but also understand your client's specific requirements. Again, on the matter of services, do you have clear and adequate rights to the property? Services can cut both ways. Do you have the right to use services, or are there services running through the land which will affect your future development? Bear in mind, septic tanks, soakaways, and so on are an issue in many properties and can affect your client's use and enjoyment of the property. A final point just on the rules and regulations that the SRA and CLC have on title insurance, or insurance. In fact, these are based on the Insurance Distribution Directive, which was a piece of EU legislation back in 2016. It arose out of discussions about issues like PPI scandal and the fact that people were being sold insurance policies they didn't fully understand. The IDD introduced certain restrictions and steps to be taken. Those rules are now going to be adopted into the FCA rules from April this year, but are still binding on you. The basis between the how you can deal with insurance under the IDD is distinguishing between introducers and advisors. An introducer can merely identify the need for title insurance and discuss in very general terms with their client, and then introduce the client to a broker. They can't take any additional steps. They can't provide title information. They can't answer questions from the insurer or the broker. They can't even take the premium as part of completion monies. It is possible to do that, but it does mean you are basically telling your client there's a major issue with a property, but I can't really be bothered to help you on this. Also bear in mind that if you are taking the benefit of an existing title policy, you will almost certainly be advising on it. So you can't get around the fiduciary rules there. We talked earlier about the fact that in many cases sellers are asked to arrange insurance. This causes a problem under these rules because who are you advising on the title insurance there? Are you advising your seller client for the nanosecond that the policy will be in place before completion, or should you be advising the buyer? If the seller's arranged it, the buyer's lawyer is still advising by saying the policy is acceptable. If you are advising, there are various steps you need to go through, particularly regards the demands and needs statements. These have always been required, as you'll know. Previously, you were able to get away with standard and generic demands and needs statements. Now they need to be detailed and personalised, showing the risk in legal terms, also the risk to the client. As part of the SRA and CLC rules, you do need to have appointed an insurance distribution officer, must be part of the management of the department or firm. And you also need to ensure that all staff involved in insurance, and that's your support staff, that's your trainees if they're getting insurance, some cases even accounts teams who are buying insurance, need to have sufficient knowledge of the rules, and this needs to be refreshed. We are able to offer training on this. We have done to a number of firms recently. If you want to talk to Index Insure, we can help you provide that. As with all these regulations, you need to be seen to be complying with them. You need to be honouring them and record your training and your advice to clients. So I'm afraid it's been rather a rush through here to discuss some topics. I don't know if anyone has any questions on specific points or on the products which Index Insure can provide for you. And thank you for attending today. And if there are any queries, please get in touch with your Index Insure representatives. They can pass them on to us or deal with them themselves. So thank you for your time today and have a good morning. Thank you.